Sounds good.
What's up, everybody? John Newfer, New Finance here. Today we have a fantastic lender guest on. We have Jay Song over with Strong Hill Capital. Jay's going to kind of break down his product for us so you can add it to your own matrix. And we're going to go over a quick Q&A as well. Now, Jay, today's date is May 5th. So Cinco de Mayo. Happy Cinco de Mayo 2023. It's really important to note the date, guys, because things do change on rate matrix, LTVs, things do change. So that is today's date. And Jay, I'm just going to kind of let you take it from here. So you have screen share ability. Feel free to start presenting.
Awesome. Ed, pleasure. Thank you so much for having me. Happy to, present our product offerings. And I really liked how you started off with the date, just because, in this industry, especially right now with the market, it's crazy how, weekly things can change. Definitely as months go by, a lot changes. So, I try my best to update these presentations with the most accurate information. So just going to quickly go through these. Just a little bit about Strong Hill Capital. So we are a subsidiary of Aeromark Partners, which is an asset management company in Denver. The guys over there do a lot larger balance deals. We are more so for the small balance commercial, and DSCR investor residential are the two product types that I do myself. So we basically focus on permanent long-term financing solely for mainly stabilized and high occupancy properties are kind of what our bread and butter is. So we have loan amounts ranging from as low as 100,000, and then our commercial product goes up to 10 million. Here on the screen, you can see the product types that my commercial program can do. Most commonly, we see, the multifamilies, the mixed uses. Obviously, with the market, office is being a little more conservative, but we also do retail, industrial, and everything right there. And then our DSCR investor residential program is I would say, a lot more aggressive right now. So these are your non-owner occupied 1 to 8 units. So a lot of lenders stop at 4, but we can actually do 5 to 8 small multifamily in this DSCR program. So when you have that cash flow restriction with the commercial underwrite, we'll actually be able to do these smaller multifamilies and actually also mixed use up to 8 units, with this light dock product, which is a big advantage for us. So our average closing time frame, I would say, is roughly 20 to 45 days post, CLAs is a conditional loan approval, is what we call our term sheet in our commercial program, and obviously the LOI in our DSCR program. So I'll kind of go through the terms of both products really quickly. So first, our small balance commercial program, we're looking at 350 to 10 million. I will say right now, our sweet spot is going to be the 500,000 to $3 million range. That's where most deals are priced at in our pipeline. We can go up to 75% typically for multifamily, and we're usually limited to 70% for all other property types. In terms of rates right now, we have some flexibility, but if I give you a range, I would say mid to high 8% for most deals. However, I do have the ability to go into the 7s for stronger deals. Most important, probably, for the multifamilies, I can get that flexibility. So we do have some, obviously, fees. We have our 1% lender origination fee due at closing. We also do have a underwriting fee of 5,000, which I can usually get an exception, half at closing, half at, at once the term sheet is issued. Now, I kind of wanted to talk about this underwriting fee because a lot of people get scared or don't want to pay this fee. The reason why we charge this underwriting fee is we do a lot of diligence up front. So when we collect documents for a term sheet submission, I need a fully executed application, credit auth, rent roll, P&L, and PFS. So with those 5 documents, my underwriters are the ones that are doing this initial underwriting. They request 48 hours to really do a deep dive into the file because we never want to waste anyone's time. So our main thing is we will only issue that term sheet once we are fully committed to closing the loan. So our execution to close is extremely high due to this. So our documentation in this product is going to be full doc. So we will require 2 years of business and personal tax returns. And we'll do like a global underwrite, but I will say the main factor that we're looking at here is still the DSCR of the property. So we offer a 5, 7, or 10-year fixed term, which balloons, and they will amortize either over 25 or 30 years. We are full recourse, and our debt yield target is 8%. The DSCR requirement varies per property type. We can get more aggressive with, again, multifamily and industrial, but for a little bit more riskier asset types, such as retail or smaller office or mobile home parks, we're looking at a 1.2 debt coverage. And then finally, our credit score minimum, we did increase it to 660. However, we can do 620 case by case. Another point I wanted to make is, as a direct lender, we have some flexibility. So we're big into what is the story of the deal. A lot of deals nowadays in this market have hair on it. There are a lot of issues. We want to know why something occurred, and we want the borrower to, explain to us how it happened and make sure that we understand why it won't happen again. So for any deals that might not qualify for a bank, a lot of times we are able to kind of get flexible and think of creative financing solutions to get the deal done.
Nice. Can I ask you a couple questions before we
Yeah,
move on?
absolutely.
So that's strictly on commercial properties, right? So your regular retail warehouse and multifamily stuff, or just straight up commercial?
Yes, so we include all of those asset types into this small balance commercial program. If you look here, I kind of listed out. So these are going to be the ones, so the mixed use, the office, the retail, industrial, self-storage, commercial condos, mobile home parks, automotive, and even some restaurants, as well as multifamily.
Multifamily too. Okay.
There
So
is
the
some
minimum loan
overlap.
amount's 350 there.
Correct.
Okay, gotcha. Um, okay, and these have to be already occupied, debt servicing. Why would someone take this loan instead of going to their bank?
Yep. So like I mentioned, we have, creative, flexible financing solutions. So although our rates are obviously higher than the banks, a lot of times we see deals that the banks deny. Most recently, for instance, I had a borrower who had a bunch of judgments and liens in which the bank didn't even want to touch. We asked the question like, what happened and why? And so they said, we paid them all off. Obviously, that we were in a tough situation. I can provide you with all the release forms. So although it took some time to get all of that done, we got all the documentation, and we were actually able to close 2 files for this borrower. So I would say we're another factor, tenant seasoning. So typically, if you got a new property that, let's say, was more so vacant or less occupied, and recently a lot of the tenants were occupying the space, if we can get 2 to 3 months of rent collections, we can use the full annual revenue, which helps the cash flow without having to have more seasoning. Again, just a lot of times we can
Okay.
kind of understand the situation better and be more accepting of the situation.
Sure, sure, sure. Okay. What are you seeing right now? What the major issues coming in right now? Because obviously banks are becoming more skittish on wanting to lend on commercial properties right now, because I guess that's where they see things kind of blowing up in their face. So tell me a little bit about what you're seeing right now with this current market, kind of most of the deals that are coming in, or maybe I don't know, reasons why investors are coming to you right now.
Yeah, definitely. So I guess across the board, no one likes office. So a lot of times I get a lot of office deals because the banks aren't wanting to do it. And we're kind of in the same boat. I would say the only office deals right now that we're going to consider are strong borrowers, lower loan amounts, strong debt coverage in a primary or secondary market.
Okay, so
I
you're
would
also tightening up on the office stuff.
correct. We are.
Okay.
And then I would say most often I see in the small balance commercial program are multifamilies, mixed use, and industrial. I'd say those are the tops. But as a whole, I would say this DSCR program that I'm going to just talk about right after this, I'm seeing a lot of volume on this investor residential program that can go up to 8 units and do mixed use as well. That's where I'm seeing
Well,
a
let's hop
lot of
in.
deals right now. Sure. So just really quickly, these are smaller loan sizes, 100,000 to 3 million. We can get up to 80% LTV for deals that qualify. I would say our rates right now, we're looking at for 1 to 4s. If you put a lot of buy down, we can do mid to high six, but at par, I would say for most deals, we're in the 7% range. But then for the 5 to 8 unit small multifamily and the 2 to 8 unit mixed use, I would say we're in the, I would say 8% range. So anytime I quote out a deal, I'll offer you the par rate and then different buy down options. And if you want, I can also throw in YSP as well. Some big factors in this program is there's no fees due up front. So we have a 12.25 admin fee paid at closing, and then the borrower is going to pay the appraisal at onboarding. There's a funding fee, and then obviously your title and title fees. But it's less commitment up front, which I know a lot of borrowers don't want to put money up front because they want to be sure that the deal is going to close. This program is light doc, so no income verification, no tax returns are required. Really, we're just looking at what's your FICO, how strong is the property's cash flow, and that's how you qualify for this deal. You can close either in an entity or your personal name. So in terms of the terms that we offer, we can do a 30-year fix. That's our most common one. We can also do a 15-year fix. We have different ARM options and interest only. So again, it's 30-year fixed, fully amortizing. And again, 1 to 8 units up to 8-unit mixed use, also condos, both warrantable and non-warrantable, and townhomes. And then we can have flexible prepayment options. So you can have no prepay, obviously, which will affect the rate, or up to a 5-year prepay for both declining and fixed. And this actually, I'm really excited about this minimum DSCR requirement. Literally, as of today, we can actually go down to a 0.75 DSCR, obviously only using taxes and insurance. So obviously we're not going to be able to get to the higher leverages as we can for a stronger DSCR, but for those that need to go down to that much, we are able to do so. We're also pretty flexible with our vacancies. So, if we can use market rents for a vacant single family, actually we can use market rents for up to 4 units. And then for the 5 to 8s, we can allow a few amount of vacancies and actually still use market rents to help that cash flow. And then finally, same here, we have the minimum 660 FICO score.
Is there a occupancy requirement on your refinances? Because I can understand a purchase, vacancy, okay, that's fine on a 1 to 4. But when we're refinancing properties, you tend to want to have at least a certain amount of occupancy. Can you tell me a little bit about that?
Yeah, definitely. So if there's a single unit for a multi-unit property that is vacant, we will have a 5% haircut in terms of the LTV. However, for most deals, I'm able to get an exception to kind of waive that. It really depends, but for 1 to 4s, again, we don't have if the entire property is vacant, that's fine with us. We'll use market rents. And then for the larger 5 to 8s, we can allow 2 units that are vacant, and we'll use 75% of market rents for those.
So you can refinance a vacant residential property on this note with no income. What about seasoning on these cash out refinance requests that are vacant? Someone just bought, they're doing the BRRRR strategy. They bought, they rehabbed, they rented, or maybe they haven't even rented and they're looking to get some cash out. What's your seasoning guideline?
So what I really like about this program is it's a lot more aggressive. Like I said, with the commercial program, in our commercial program, we need 12 months of seasoning on the property before I'll be able to use the current, the current valuation, obviously, because it's going to increase a lot since the purchase. In this program, if I get 6 months of seasoning, I can actually get a cash out refinance. We are limited to the amount of cash out I can get, but generally it's, when you're in the 6 to 12 month range, I can do for 65% or lower LTV, I can get 500K solely cash out amount to the borrower. And then for 65 and up LTVs, we're going to be at 250,000 for the cash out amounts that I can get to the borrower.
Right on.
All right. Next, this is also part of the DSCR program. What I really like is we tailored this program to help the brokers, which is you guys. So you guys will sign up with us, and it's very simple approval process. You don't have to make a certain amount annually, or we're not pulling your credit or anything like that. It's just to get you on board and have your information. But on our broker portal, I kind of wanted to show you guys we have this system where you yourself, without even talking to me, can get a general idea of where the pricing's at. So these are obviously very general information, what's the purpose, occupancy, type, the numbers, the FICO and the DSCR, and it'll actually spit out what, based on our daily rate sheets that you'll also have access to, what the rate's going to be on a 5-year prepay, fixed would be for this scenario 7.5. And I just updated this. So this was as of, an hour ago. And then for the declining 5-year, we'd be at a 7.75. So again, some key programs. I'm really pushing this DSCR program because I think that's where our strong suit is. No upfront deposit, flexible prepays. We'll lock your rate for 30 days once your deal is onboarded with us for no additional premium. And then you can obviously extend it if it, expires, which usually we don't get to that point because we usually close within 30 days. And then finally, this broker access to, one, view all rates daily, and then quote deals yourself on our portal.
Does the broker have the ability to issue the term sheet himself, or he can quote it here and then kind of wait for you to issue that term sheet?
Yeah, so the term sheet's going to have to be through me. So you can sign the deal up yourself. Most brokers, use this as a reference and then discuss with me to make sure everything's correct and that they understand everything. We will need an application fully executed and a credit auth to get a term sheet out, just because, again, we're really big on it, ensuring that the deal can be done. And I don't want to put my name on something if I'm not fully guaranteeing the borrower or mainly you that, I've looked at this deal and I can assure you everything is correct.
Gotcha. Do your notes require a personal guarantee, or are these non-recourse notes?
Yep, these are both programs are going to be full recourse with a warm body guarantor required.
Got it.
So I just wanted to highlight a couple deals so that you guys know what kind of deals that we close. These are just kind of very basic. So this was in Austin. So we're headquartered in Austin, Texas. So I wanted to highlight this one. This was an owner-occupied warehouse we got. Obviously, this rate was from a while ago, but we're also, you can make good commission as the broker on this. Our cap is 5% on both the front and back end. So this was an Austin deal that I did several months ago. Another deal. So we're nationwide, besides just a few states. So this one was in Connecticut that we did for this is exactly the Burr system. This guy bought this property for a lot cheaper. It was less occupied. He increased the rents and then cashed out quite a hefty amount on this one. This is the DSCR program. So this was an acquisition of it was an 8-unit short-term rental. So we can also do short-term rentals in this program. And then finally, a recent one was we did a 5-unit mixed use in Chicago, cash out for a borrower.
Chicago.
Got to be careful with where exactly in Chicago we lend to, but in most cases, we'll do our diligence, and if approved, we can get the deal done.
I understand.
So, my big thing is I want to be efficient, right? I don't want to waste your time, and I hope you don't want to waste my time. So I always want to have as much information as possible up front, whether that be through a phone call or this loan submission form that I'll send out to you. Essentially, if you have all the information on this form, I can have a pretty general idea on whether we can do the deal or not and give you, a soft quote at least. I won't go through all of this, but it's essentially the borrower information, the collateral information, transaction info. If it's owner occupied, the additional business financials we'll need. And like I said in the beginning, it's just very important to provide you with everything, and also any potential challenges that we may face is important. I think in this small balance world that we're in, we're dealing with your regular Joes. A lot of people don't know things or may not know that, certain aspects may be an issue. So I think it's very important to find this out in the beginning of the deal rather than in the middle of the deal or at worst, at the closing table. So just wanted to throw that out there.
Sure. So if someone gets a deal, this is what you want to see to get a quick response. And what are you going to tell them? Throw the deal into the portal, or what's the next step after they send this to you? How quickly can they get a response, and what are they doing next?
Yeah, I think a really important aspect to, be successful, especially in this industry, is communication and speed. So I hold a standard of myself of responding, within the same day. So I'll provide you with feedback, with additional questions if I need. If not, if you're able to either fill out this form or at least give me all the information on this form or most of it, I can immediately provide you with a soft quote at least. So, like I said, we have two different programs in our commercial one. We have more diligence docs that we'll need. We need at least 5 that I'll send you after this. I'll say, go ahead and start filling out these docs because I never want you to fill out docs if we can't even do it, on our templates. And then for the DSCR program, very similar. I'll give you a quote or ask more questions. And if I think it's a go, then I'll send you our application and credit authorization, which are the only 2 docs we'll need in that program for an LOI.
How quickly can you get a term sheet? Let's just say, yeah, I mean, how quickly?
Yeah. So in our commercial program, I always have to separate it because I want people to know that it's different. We have completely 2 different underwriting and processing teams. So in our commercial program, if you submit all 5 docs, we're committing to a 48-hour turnaround time. Obviously, that is longer than some, but I would rather take 48 hours in the beginning to find out everything rather than 2 weeks later finding out something that we could have done a little more diligence on the front end. In our DSCR program, we're usually, 1 business day. It's a lot quicker because it's easier and smaller deals. And again, that's just with the fully executed application. I will say that's very important. We will need every single item on the app completed. Otherwise, we will have to come back with you to get additional information.
Roger that.
Right. Just like I mentioned earlier, these are the docs that we'll need. So in our commercial program, it's application, credit auth, rent roll, operating statement or P&L, PFS, and then if it's a purchase, the purchase agreement, and if it's an owner OC, the owner OC docs. And then for DSCR, which we call it the Investor Achiever program, it's just the application and credit auth. And then just a little bit on our process and what to expect. Again, I always, differentiate the 2 programs. So you'll get the term sheet, and then if you sign it, commercial, there's a deposit, resi, there's not. You'll get an analyst assigned. In our commercial program, we will have a kickoff call with the broker, myself, and the borrower, and our senior underwriter to all, meet each other, introduce each other, and to discuss the deal. Resi, we do not require this call. We'll immediately order third-party reports because we want that to be ordered ASAP. Obviously, those take the longest. We'll get your needs list or conditions list out. We'll begin processing and underwriting. We'll get all the docs from you. We'll move to final. And on commercial, we'll issue a final term sheet if anything's changed. And then obviously closing, signing, and then the payments. So that's kind of our process.
Very good. Very good. Are you guys table funding?
So we are allowing that in our DSCR program, but not in our commercial program at the time. And if you have any of those types of deals, please feel free to reach out to me. I will have to connect you with someone else on my team, but I'm happy to make that introduction.
Okay, very good. So if you want to become a white labeler, a table funder, it's just an additional process. You have to meet someone else on your team. What were you saying about that?
Yeah, so I mean, we have white label docs for both programs. I mean, I have it to where two of the same documents, to one says Stronghold on the top and one doesn't, and essentially you won't know who the lender is until the deal is signed up. But if you want to go all the way like a true correspondence, then again, only in my DSCR program. It's the same process. It's just someone else will be handling it. He's kind of in charge of all the correspondence channels.
Okay, got it.
And I'm going to be more so your typical just direct lender, direct AE with you.
Got it. Got it. Okay. What should we know that we don't already know, Jay?
It's a good question. I would say it's really important to have a fantastic relationship between, the originator and the broker. I think for myself, communication, like I said, is key. I know some people have different strategies, but I guess the way to sell myself, I guess, is, things are bound to happen in the small balance world. Issues come up later on, and there's hardly ever a perfect deal nowadays, right? So I take my time in doing my initial diligence. I always go into a deal thinking, what's wrong with this deal? There's no perfect deals now. What do I need to dive into? And then if obviously, hopefully that all occurs in the beginning and we're comfortable with it. But then, things happen and later on the underwriters, I mean, I swear they're FBI's, right? Like they'll find out things that you don't expect. And I think it's very important to relay that information as soon as possible instead of some people, wait till closing or something like that. I think time kills deals in the
Yep.
wrong way sometimes. So I think it's extremely important to what I do is talk to you, the broker, first before I talk to anyone else. We strategize together on how to fix the solution. And then together as a team, I'll never go behind your back or anything like that, work to find a solution to get to the closing table.
Right. Time kills all deals. That is the truth. So the longer you sit on a condition, the more conditions that are going to pop up. So
Exactly.
and the odds are, I mean, here's the thing: you got to strike while the iron's hot in this industry, especially considering how much power the Fed and the government have over what goes on and what we do. So you got to strike. If there's a hot product, if you have a borrower that's on the hook, if you don't strike, then if you wait for that borrower to do whatever he wants, that hook's going to come out. So you need to keep pressing. So time kills all deals, that's for sure. I'm totally with you, Jay. And another part to what you've been discussing is the underwriting call. You got the phone call with you, the underwriter, the borrower, the broker. That's 4 people. I always say this, it takes a village to fund a loan. So it takes a village to fund a loan. So remember that Jay's on your team, the underwriter's on your team, even though it might not seem like it. You need to be on their team, because if you're not on the lender's team, then and you're letting the borrower think that they know what's right the entire time, then whenever there are hangups, the borrower, it's going to make it a lot tougher to close. You always need to kind of side with the lender on why they're requiring certain things. And if you don't know the answer, you should be asking Jay. And I'm sure Jay can back me on all those points.
Yeah, absolutely. And I think, if you ever have pushback on why we're asking for certain conditions, I always say, please, like, ask these questions. I would rather you know why we're asking for it than if you don't and you just blindly send us something, because maybe that'll help you feel better about it or help you provide it to us quicker. Totally agree with you on all aspects.
Oh yeah, no, definitely. You got to be with the borrower. I mean, excuse me, you got to be with the lender. Now, you're kind of playing both. You're a double agent. So you need to appear like you're on the borrower's team, which you are. And you also need to appear like you're on the lender's team, which you are. You're playing both sides of the coin to make sure the deal gets funded. Strong Hill's relying on you so that the loan doesn't blow up
Exactly.
in the borrower's psychology. So Strong Hill's going to be relying on you to handhold that borrower and make sure he's cool all the way up until closing. And they're going to do everything they can within their guidelines and what their investors are willing to take to get the deal funded, because they're here to fund loans.
Exactly. Yeah. Just to piggyback off of that, the lender needs the AE to generate revenue and, keep all of our jobs, while the AE also has to be on the borrower and the broker's team to help facilitate the deal and ensure a smooth process. So definitely, I like the double agent comment and totally agree on that. And it's very important to, I think, to have a smooth process and to have a full understanding on everything amongst everyone.
Yeah, no, absolutely. And there's always a reason, I always get deals that fall out from other lenders, and they always say something like, oh, the lender just pulled out last second for no reason. And it's like, come on, man, there's always a reason. There's something that's happening. Yeah. And so, yeah, you always have to ask, and you should always side with the investor's point of view. When I say investor, I mean the note investor, which is the lender. The investor's point of view. From the investor's point of view, if they're asking for an additional document or whatever, when you're talking to the borrower, you need to always just express from their point of view, this is what they see.
Right.
Whatever it is, they're blind to this, or this money came from a loan. They think it might came from a loan that might have increased your debt. So we need to find out where it came from. So always side with the lender's point of view while to help explain things.
Yeah, definitely. Like I said earlier, I think in the small balance world, especially in this market, there's never a perfect deal. So if it
Yeah.
falls out at the last second, there's no way that happened for no reason, right? So, whenever a broker sends me a full package with, they say, hey, I got the appraisal, we should be able to close next week. I'm like, then why didn't the other lender
Yeah.
close next
Why
week?
didn't the other?
So
And that's the first question you should be asking when you get the deal.
exactly.
If a borrower's got a full package, man, there's some hair on that deal. It might sound good. I
Exactly.
got the whole thing. We should get going right now. I need to close in a week. It's like, all right, well, why didn't the other lender fund? And
Exactly.
then let's
Exactly.
slow down. You need to slow things down for the borrower.
Right. Right. No one wants to work for free, so they would have closed if they could have.
Absolutely. Absolutely. Well, we only got a few minutes left. I'm going to open it up to questions. Um, I think I have Jeff Wiresinger on the phone. Jeff, can you hear us? I'm going to ask you to unmute if you want to hop on the call. If you can't, I'll just wait a couple seconds. And if you can't, you can just type in the chat and I'll ask.
Yes, I do have a question.
Go for it.
Do we do a screening, have like a screening that we need to be aware of as far as what you do directly? I didn't get on the phone till a little
Jay,
late.
before you answer that, Jeff, before you were on the phone there, Jay went through a pre-screening sheet, essentially, kind of like what you and I have that we work on. You're going to want to send him that sheet and maybe a few of those data points. So go back in the recording and you'll see that, I don't know, it was about, 10 minutes ago, we went over that.
Not a problem. If it's available, then I'll see it in the replay. I'm sorry, I was on the phone with a client.
It's all good.
No problem. Hey, pleasure to meet you, Jeff. Yeah,
Same
so
here, Jay.
really quick, basically, I have a sheet that I send out, but really my main thing is just send me everything that you have. It's only better. It only helps the deal if you know more up front rather than later on. So obviously all the cash flow figures, the borrower information, the property information, the transaction information, just anything and everything you can get your hands on, up front is better than later.
Okay, good enough. Good enough.
That's a great response. I'm the kind of guy who says, only send me what I ask you for. I don't want anything more or anything less.
Hey, I used to be like that too, but I'm tired of getting burned later. So I'd rather figure out now and decline the deal up front if it's not going to work.
Right. I guess the philosophy there isn't that I want to turn a blind eye. It's just that I don't need you to send me everything. I don't want to look through a bunch of stuff. I prefer to get my answers up front, which is why you have that deal sheet, right? Give me the answers that I need. Don't tell me the answers are in the appraisal. The answers are in that. It's like, you got to fill this out for me.
Right. Because you want to know if they know their stuff too, or if they're and the level of competency they have. But yeah, I think knowing more up front is better. And like I said earlier, like I swear underwriters are FBI agents now. Like they'll find out everything. There's no way that you get all the way to closing without an important problem, that gets, not found. So, they're there for a reason, obviously to protect the company, but also they're doing their jobs and they're really good at it. So, help them out by knowing more up front and asking more questions up front.
Okay.
Right on. All right, I think that's all I got for questions. I don't have anything else. What's the best way to get signed up with you, Jay?
Yeah, so in our commercial program, I don't need like a broker app or anything. You can send out my email and phone number, and I'll always be available. Again, for our DSCR program, which is a little more aggressive for me, we have a broker app, so I'll need that along with your company W-9 to get you approved. But I do want to say, like, we don't require a certain amount of production to get approved. We don't require a credit check or a background check, anything like that. It's just mainly to get your contact info, and then you'll have access to that portal that I showed you, and you'll see our daily rate sheets in that program, in which rates don't lock until you actually submit that request.
Fantastic. Well, Jay, I thank you for your time, and everybody,
nice I'm going to be.
You too.
And I'm gonna be posting exactly Jay's contact information. You should already see it in the event that we're in right now. However, Jay's gonna be sending me those applications as well that he wants to see on every single deal. That'll be in the section of this event. So you'll see it in the comments below. Jay, thank you so much for hopping on, brother.
Yeah, pleasure. Thank you for having me, and I look forward to getting deals done with you guys. Thank you.
Yes, sir.